Hey everyone, in today's video, I'm going to show you a simple scalping strategy using a free indicator. You won't need to pay anything. It's completely free. This strategy will help you buy and sell in a way that boosts your profits. If you're looking for an indicator on Tradingview that works well, then this video is perfect for you. The indicator I'll be showing works great with cryptocurrencies, Forex, and stocks, and it delivers quick results. It's important to understand that successful traders don't just focus on having a good strategy. They make sure to set their stop loss carefully, because it's the stop loss that will decide whether you stay in the trade or exit. That's why I'll show you the best method to set your stop loss. We'll take a look at examples from different markets so that by the end of the video, you can achieve consistent profits. I hope you learn something new and start seeing steady profits in your trading soon. I'll guide you through everything step by step and explain the details, so make sure to watch the entire video. We'll begin by explaining a strategy that relies on using two indicators. The first signal indicates that the trend will change when the candle turns yellow, and after that, we will wait for a confirmation signal, like this candle that has an upward arrow. In the sell signal, the candle will turn yellow. Sometimes you may find more than one yellow candle, and that's okay. We will wait for our second signal when a bearish candle appears, followed by a downward arrow. The second indicator helps confirm whether the market is in an uptrend by turning green, and in a downtrend, it turns red based on the alignment and behavior of the moving averages. Now let's combine the two indicators. When the moving average crosses at the same point where the candle turns yellow, that will be our first entry signal. The second signal is when I get a green candle that indicates entry. At that point, I will enter the trade. In the sell signal, as you can see, the moving average has crossed after these two candles and did not intersect with them. So we will avoid this signal. Here I have a signal where the moving average aligns with the yellow candle. Sometimes you will see different patterns of yellow candles, one or more than two. What matters to us is the alignment of the moving average with one of these candles, followed by the second confirmation signal, which is the bearish candle with the entry signal. Now, I will tell you how you will trade. Let's start the video. We will open the chart for 5 minutes or 1 minute. This strategy works on 1 minute and 5 minute charts. First, we will search for the indicator in the Tradingview search box, CM Ultimate MA. Next, we will search for another indicator. Simple EMA Trend Filter. We will change some settings. Setting MA mid to 21 and MA short to 7. This option is optional. I will change above bar to green and below bar to red. Let's see how we will trade Forex with different currencies when we receive a buy signal. We have a yellow candle with the moving average crossing over. That's our first signal. The second candle will be the confirmation to enter the trade. We'll place the stop loss at the previous market low. You can also use the moving average as a tool to set your stop loss. When the moving average aligns with a recent low point, you'll get a solid stop loss position. The risk to reward ratio will be 1 to 1.5. The price reached the target. I hope you find this strategy helpful, and I will show you some examples for better understanding. As you can see here, we got the first sell signal with the moving average crossover and the yellow candle, followed by the second candle for confirmation to sell. we'll set the stop loss at the previous low, and the risk-to-reward ratio will be 1 to 1.5. The price reached the target. In trading cryptocurrencies, it will be the same method and the same time frame. Here, our first signal is the crossover of the moving average with the yellow candle. The second signal we received is the confirmation bearish candle. The stop loss will be set above the previous high. When you see this consolidation, you will have an excellent stop loss because the prices have bounced off the high 4 times. When I see the price fail to break the previous high and rebound with the entry signal, it will be an excellent trade. And the risk-to-reward ratio will be 1 to 1.5. Always try to choose trades where the stop loss is appropriate. The price reached the target. Here I have a signal where the moving average aligns with the yellow candle. And the second is a confirmation candle. I like this type of trade when I find a very clear stop loss. As you can see here, I have a low, and the price tried to drop previously but failed to break this low. This indicates that the price will not continue downward because there are more buyers than sellers. So the stop loss will be set at the low, and the risk-to-reward ratio will be 1 to 1.5. The price reached the target. Always remember that risk management is the key to success in financial markets. Losses are part of the journey, but controlling them is what makes the difference. Trade smart and with confidence, and let the profits come as a result of well-thought-out strategies. See you in the next video. Thank you for watching.